The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So we've got an S&P that's basically flat. The Dow is off 106, NASDAQ's up 36, and the Russell's up 5.5. So we've got a very torn and twisted market, and most of that started with incredibly light volumes for a 40-point move on the S&P on Friday. Today, we have even kind of more alarms of light volumes. As I said, you know, you want to see somewhere around 2.2 to 2.4 billion shares on the NYSE consolidated tape. We've got about 1.76 billion shares as we start the show. This is a big signal that there is something that's going to change. There may not be any volume down. There wasn't any volume up on Friday. So I think you have to, at a minimum, you have to think cautiously for any higher prices. And a little less cautiously, you have to think downtown. Julie Brown is where we're headed for a little while, not a huge while. But at 2786 or 2787 on the S&P cash, we're kind of down at these levels. Now, I've done something today that I only do a couple of times a year, and that is went short the ES pre-market, pre-market, and I'm going to sit on that unless it stops me out at break even. But I think we've got a pretty good situation here for seeing a pullback in expiration week, which is something you don't see a great deal. Options didn't move a whole lot on Friday. We talked about that. They still show that we could get back down to 2680 to 2700, which, you know, we've got 5 days. And of course, the end of the day is going to be much more important, I think, than the beginning. But that we went up, tried to tag a higher high, had no juice, came down, didn't find a lot of people willing to short this. So we've got fairly light volume. Is exactly the way textbooks have shown tops since back, I guess, in price and volume to 1910, when this really started off with the Wyckoff method of looking at and basically placing your orders based on retests of previous highs and lows. Well, we certainly got that. In fact, we got that with a lot of stocks, and that's normally Friday's action. We'll go through a few of those stocks, but that kind of action normally comes within a couple of days of a trend changing move lower. And there's a ton of these stocks. I showed the best of them today in the newsletter this morning. We'll look at a few of those in the show. But at the same time, you know, could volume come along and get more and more push higher? I think the answer is yes. But for me, this is one of the 2 or 3 times that I'm willing to go out there on a limb. For those just trading right now, I think the best thing is what I'm doing in my newsletter, which is buying out of the money puts for expiration on Friday. If the market could go higher on lighter volume, then maybe I would say, okay, I'm willing to take some very tiny losses. I mean very tiny losses. How about 50 cents on a $180 stock? How about 25 cents on a $60 stock? I mean, that's kind of where I'm at right now with out of the money puts. I want to have the least amount in the game And if the wheels do fall off the proverbial market wagon this week, I do suspect that I will cash in mightily. Now, one of the warnings I always give people when they talk about options is that options are to reduce risk, not put more on. So if I was trading a stock and I could lose $1,500 on just a regular play, if I was trading the equity with a standard, let's say 5% stop in the stock, well, that means that I could put $1,500 into options and know if I lost them, I wasn't any worse off than I was using the actual equity itself. So options are to reduce risk, not put more on. And I love playing options in options expiration when they look the best. And do I always win? The answer is no. But when I do win, it's a 5-to-1 or a 10-to-1. And most of the time I can hit 400 or 500. I can get upwards of half those right. But the returns are so much bigger. And that's what I mean by making sure you don't spend all your money up front on a single option. It may take you 2 or 3 times or 2 or 3 cycles to get it right. But when it does, you've made so much more money than if you were sitting in the equity. And that's what we're looking at. So anyway, we've got a couple of minutes left to go in this first segment. We're down 2 points. But for me, you get a close down about 27.78 on the cash. Anywhere below that, I think you've got confirmation in a low. And in the meantime, let's go do a little history before we go to the break.
And it's all just a little bit of history repeating.
Sammy Sosa strikes out infrequently. Of course, can anybody name the biggest strikeout king of all time? More strikeouts than anyone else? Yeah, Babe Ruth. Also, adjusted for inflation, the highest paid athlete there ever was. On 2008, a video streaming service called Hulu is launched to the public. Hulu has since become a focal point for the ongoing development of streaming TV for those big guys, i.e. the networks, by agonizing TV networks and movie studios. It also revealed Alec Baldwin to be an alien, which didn't really surprise anybody. But of course, Hulu was formed by the 4 big networks as an exercise in how to take their content to streaming. It still has not become a big success, but at the same time, most of the people have been able to keep their foot in the water, which I think all these guys want to do. They don't want to take a giant jump and then find out that they've got no cash next year. They wanted to kind of ease into it, kind of like rolling down the river, Ike and Tina Turner. They didn't like to do anything easy. Well, that's what Hulu is. A little bit pregnant in the streaming business. It seems to continue to do a little bit better. In the meantime, we're going to go to a short break. We'll be back. We'll see how the end of the day starts to sharp up, but you got to be scared of the volume. Only 1.8 billion shares so far.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. American Airlines. I wonder why. Does that sound? Yeah, it sounds better to me. American Airlines, wanted to take a look at this one. We got a ton of stocks that are doing this pattern. We even have a ton of stocks that are doing even a even worse pattern. But I wanted to, we'll go through a handful of these here today. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. But if you're at an Earthlink address, do not expect a response from me, as Earthlink has problems. And I think somebody sent me an email, and I tried to respond, and it instantly bounced. And what was this? Okay. Okay. Yeah, Justin, if you're listening, with an Earthlink address. If you can email me with yet another address, some other address, because that one instantly bounces, and I'm told by our tech staff, crack tech staff at TFNN, that we can't email you. I don't know the reason why, but your Earthlink address instantly bounces anything from us. So anyway, back to American Airlines. Gap down on the 24th of January, did so on 16.4 million shares. Friday, we got into that with 3.5 million shares. Today, 1.5 million shares, an even higher high. As I say, I love to see that if you're looking at shorting these things, I love to see the gaps about halfway filled with a light volume, and that's pretty it. As almost everything I looked at over the weekend, you've got huge energy down from the January 16th high in this case to the February 9th low. You came back up, and energy is somewhere between 25 to 50% lighter on many of these stocks. But take a look there. Agro, A-G-R-O. A handful of stocks actually testing lows on lighter volume. Don't know what this thing really does. But was one of the few stocks out here testing lows on lighter volume. 2 million shares on the November 15th low at 833. You had 500,000, 800,000 on Friday. Very light volume today. Agro sounds like some kind of company that does agriculture, doesn't it? What is this thing? Agricultural company engages in farming crops and other agricultural products, dairy operations, sugar, ethanol, and energy productions in South America. So maybe there's something in there. Would expect if the market comes down, though, it's going to be hard to make any money. Applied materials, even though we had a bounce higher today, Friday in most of these semis saw some fairly light volume. 18 million shares on Friday as we busted the November 17th high in AMAT. That was $60.89 with 27.5 million shares. Again, we busted that with 18 million shares, just 11.2 million shares so far in the day. AME, which is Amtech, got a little triple top forming out here. The first one was 1.65 million shares, the second 1.25 million shares, and of course on Friday 778,000 shares. So you've got that. ANSS, which is Anna Systems. This one's been pushing this last low from February 22nd at 154.02 up to the highs of breaking the previous February 20th high of 900,000 shares with 432,000 shares on Friday. Today, just 200,000 shares. To AON, which is Anon. Again, love the way that these things come up and test halfway into a gap. This one did gap down a couple of times with 1.7 million shares and 1.5 million shares back on at the end of October. You got into it with 2.2 million shares, so you know you're going to get a retest of that. And of course, on Friday, 1.4 million shares, getting a little bit of those tweezer top looking candles and a lot of what we're looking at. So keep an eye on that one, but no juice, especially earlier pushing in the market. EW, which is Edwards Life Sciences, a biotech. We'll look at the IBB right after this. 138.48, February 2nd, 3.3 million shares. We're pushing that on Friday with 1 million shares. Today, 662,000 shares, a slightly higher high and a doji. Now, here's what I really want to point out. In fact, why don't we go to the chart drawing stuff. Here's my power law vector indicator, which of course gives you the kind of energy, the amount. Think of it like paying an electric bill, using a hairdryer and using an air conditioning unit in the middle of the summer. You're going to use a lot more power on an AC. It's on a lot longer, and of course it draws a lot more power. So off this high, 138.48, you had a 3.2 on the way down. You only could get a 1.9 on the way up. So basically it came up using 2/3 of the energy that this thing came down on. So kind of a good idea to watch that. And now, no real surprise, this thing came up on light energy, that it didn't break the highs with any kind of juice. And of course, there's a handful of stocks coming out with earnings, but for the most part, there's not going to be a lot to move anything into the Fed, which is next week, Tuesday and Wednesday. And I think that one's kind of a foregone conclusion in what happens dead. I think it's 86% of a quarter point move. The question is, what do they say past then? And my thought is that they are going to accelerate bond sales and try to throw a little cold water on a market that probably is a little overheated. Let's take a look at FDS. Do we have enough time? We do. Make sure and give me a call at 877-927-6648. Fact Check Research, which is a market data company. Had a couple highs, one 556,000, another one 768,000 at 207. That goes back to the December 18th high. So what did we hit and blow through it with on Friday? 182,000 shares. You got a little pike out here tonight with no volume, 81,000 shares, which gives you an idea just how fast these things can shrink. You've got a high volume untested low back at 183.89. Let's take a look at GD, which is General Dynamics. It certainly looks like that ITI has probably had the best time that would have. Energy off the February 6th low, just slightly less than the energy off the January 29th, 229 low. You had 3.2 million shares on that date. Come into Friday, you hit it with 1.3 million shares. So a little less than half, more than half actually. As we hit that, and a reversal out here today with a light volume. We'll be back in just a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to look at some other stuff, but looking at the IBB out here today, again, we're starting to come into some of these heavy down days. 3.7 million shares and what was that? 6 million shares back on the 5th of February. We're back up, but volume has been very light. 3 million shares on Friday, better than some. 1.2 million shares so far today, and a little doji. So you're basically looking at 3.7 million shares and a 782. Is that right? Yeah. 786 retracement in the IBB. I always thought that this would be a better sector. It is not looking that way so far. Again, on this one, 4.7 on the way down, 3 on the way up. It tells you a lot of these are extremely weak, at least for the energy on the upside, when that, especially the time of year, we should have seen these things really strengthening in this last leg. Another one that shows a very weak leg from February 9th is Morgan Stanley. You have the $85 high on January 29th. That came in with 16.7 million shares. 8.1 on the downside, 5.9 on the upside. Now we start looking at the volume. It came in on 10 million shares, 10.5 million shares against that 16.7 million share high on January 29th. Today, 4.77 million shares so far. So let's say 8 million shares compared to that 16 million share high. And it's not uncommon to see, you know, these things extend a little bit. But when you have half the volume, you normally see these things come back into the trading range easily within the next couple of days. Please share what you like of the rally extensions in Micron, Lam Research, Apple, Amazon, CRM, etc. This, again, feels very much to me like the dot-com bubble, not near as bad. But we have a lot of people you know, when everybody figured the jig was up with these flaky dot-com companies that made no money, everybody started flooding into the big tech stocks. But by March, that had kind of rolled over, and we started seeing the real destruction in the market in 2000. Same kind of thing. You just need to be extremely wary of any kind of stock when the volume, especially not over a Christmas holiday or a summer holiday, when the volume just all falls out. And that is a pretty good indication that you've had it. And it's always, to me, you know, you've had real sharp reversals, but those reversals seem to have always been tested yet again within the next 3 or 6 months in the past. What you really worry about are the ones that come up here and are very soft and easy and don't give you a real instant clear signal that says, hey, a high is in. Then you can see some highs that are a little bit longer term. Northern Trust, NTRS is the symbol on this, 108.81 on January 24th with 2.2 million shares. Friday, you break it with 1.2 million shares and just 500,000 shares today on just a penny, I think, higher high than on Friday. What else did we have? QLD. This one's going back up against this January 29th high of 2.85 million shares. You saw 1.9 million shares on Friday. Today, 1.5 million shares. So this one's a little less. But again, what you don't have is the kind of energy off these lows, the February 9th low in this one. Qorvo, QRVO, which is the old RF Micro Devices and a handful of other of these companies that got together in the smartphone business to be supplier. This one's kind of very interesting. 85.25 February 1st high, gapped up on earnings, 10.6 million shares. Friday you had 1.4 million shares, and today you got 925,000 shares. So you're going to go over this previous high. You're going to have fairly light volume on these. And again, the risk would be right back down to this gap at 73. Now, again, some of these things I suspect are going to start rolling this week. And then probably the stronger companies maybe roll a little next week. We'll see how this does by the end of the day. But if we get my guess is I'm going to do a scan tonight, and I'm going to double the amount of stocks that tested previous highs with light volume that we found on Friday. By Wednesday, if I am playing and living right, and the trading gods do not shake their fist at me, we're looking for this thing to probably be below 2750 on the S&P cash and making its way down for Friday to 2700. So it's just a normal run, and you do not get fired for buying Apple or Amazon or Salesforce at the highs. And I think a lot of people are forced to buy highs right here, and they're buying the stocks they think they're going to get hurt the least on, which are these big companies with big bank accounts. So that's about it. Looks to me like everybody's kind of crowding in to these trades, and generally, if you go to a trade because you think it's safe, it generally is not. Sleep numbers, kind of interesting trading range today, but this thing had a February 15th high at 3780 with 1.26 million shares. Did that on Friday with half the volume, 622,000 shares. And you got a little roll off today on night, not much volume, but looks to me like a fairly decent trading range is set up between 3780 and 3350. We'll call it about that. URI, a nice high out here, 189 from January 25th. Did so with 3 million shares. On Friday, we had 1 million shares. Energy also off that low from February 9th up to this high on March 9th. Came in about 30, not quite 30%, let's call it 25% lighter energy off that February 9th low from that January 25th high. So a lot of these things are starting to really show the kind of weakness in this leg that we started coming off of in early February off those lows all the way through the 15th. And again, like I said, my guess is we're going to see a great deal more of those start to show lower tests. Now, we could hold on to this for another 5 days, and it would the signals would still be valid. So as I said earlier, I'm mostly playing a lot of these stocks that we're talking about and will be this week with out-of-the-money puts, and trying to keep the loss to an absolute minimum. If the market fails this week, so be it. I'm willing to spend 0.5% on a trade where I normally would have stop out on an equity at maybe 5% loss. I'm willing to spend 0.5% or 1%, just because the return, if the wheels do fall off the market this week, are going to be rather magnificent. So we'll be back after this. Give me a call, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Had a good question out here, and gentleman bought some options. And the question is always, you know, when would be a good time to close the trade? And if I'm playing options for expiration, I hope that's what this question's about. Kind of kind of tough to figure out when he got them and what he did with them. But you know, the only time I get out of them in expiration week is if I know I am 100% wrong. You know, I might sell some if I know that I'm wrong, but most of the time these things are going to make your life hell if you've got your world all bet on them. If you can sit on your hands and take the loss, generally those are, especially Thursday and Friday, you get a huge amount of money on the other side if the markets don't instantly fall apart. So one of these things where you have to be able to just say, okay, whatever I spend on this, I know is going to money heaven if the trade doesn't go my way. And that's kind of the way I look at them. And, you know, I pretty much know where they're going to go. If they don't go there, you know, they can go there on Friday morning. And that is the problem. If you're trying to get in and out of these things, I just kind of sit on my hands and say, unless I know I'm 100% wrong, I kind of sit on them and sit on my hands. Okay, Vertex Pharmaceuticals, 5 million share high at 174.96. That was the February 1st high. Of course, we get into that on Friday with 1.4 million shares today, just 760,000 shares. So a lot of these things are going to come in. Power law vector indicator number down on 3.4, up on 2.8. So you can get an idea that these are kind of logarithmic numbers. That's the way you ought to look at them. But, you know, you just know that you're coming up here on weak. You know, if you're long and you think that the market's bullish, pretty good indication that it's time to take your cash. The energy didn't come up with you, and you didn't get volume at these highs. If it takes more than 3 days to get volumes at highs, I'm out of the trade, because normally if you on that fourth day is where you get the destruction if they can hold them up there. Anyway, we're going to look at some other stocks. And, of course, everybody piling into the most well-known stocks. I think they think because, of course, they'll lose the least, but we'll see. Another little pop up to 1605 in Amazon. You can see that the volume really been trending down since this low of February 9th. You never really tested that 12 65. This is probably the least easy stock in the market right now to short, so I wouldn't short it. But I do suspect that you're going to see some of these stocks have some pullback. This one, I think, could get back to 1,500 for expiration on Friday if the rest of the market decides to take a nosedive. We're off 6 points on the S&P cash, and as I said, one of the reasons these markets, the way that they're acting today, become so devastating to many traders is that great markets don't end with some kind of signal that everybody in the world sees. They tend to be frog boilers. And if you don't know the study on frog boiling, there's a apocryphal story, means it's not true, of putting a frog in a boiling pot of water and he gets burned and he jumps right out. The idea is to put the frog in some cool water and slowly turn the temperature up until the frog is boiled. Everybody always says, especially the move that we had before, that if it ever got back up here, they would sell their shares. That the misery of February, they no longer want to see. But you know what? The markets did so well that, hey, I'm a genius for holding. Well, I can't say or I can't promise you that this is some kind of high. I can tell you, though, this is the way that highs are made. Everybody says that they're going to sell. They hold. It gets back up to the previous or close to the previous high, and nobody is willing to sell because they've all think they're geniuses once again. And then the market pulls back again, and they just assume it's going to come up again, and it does not. And it continues to kind of pull back a little bit, pull back a lot. I'm not predicting the end of the world or the end of the market. I am predicting higher interest rates. And as we said before, you can say broadly over the market, 1/3 of the profits are from zero interest rates as they continue to go up through 2, 2.5, 3, up to probably some level at about 4%, which I think is the final target for the Fed. And then they're going to leave it alone for a while and see how the market does. But, you know, that may take 2 more years. But it's not going to be one of these things where it just goes away. It's just going to go away for a little while, and then they're going to come back. As long as the economy is doing as well as it is, as long as the job numbers come in as they did in absolute boffo numbers on Friday, we're going to continue to see a Fed that's more worried about inflation than growth, because the inflation could blow that $20 trillion worth of debt up, and that's the last thing that they want in the world to happen. So I'm still waiting for my phone call. I'm feeling like the Maytag repairman. Just so good that no one needs to call. I like the guy. He was in wasn't the same guy that was in WKRP in Cincinnati? I think it was the same guy. Now they have a real buff-looking guy that looks like he spends 8 hours in the gym. But I don't think that's the same as the Maytag guy. Anyway, we're off almost 6 points in the S&P cash. We're going to test the lows of the days around here. Probably going to do that in the coming break. And then, of course, we're going to see what happens. Now, normally what you look for in these breaks, like we're going to have today, is off the top, no volume. And I'm talking about long, medium term, not just short term market tops, that you don't get any volume off the high. What you get is kind of a low volume move, and then the volume slowly picks up as the market goes lower. Always loved the description back when we were trading around 786 on the S&P lows. 786? Yeah, I think that was 786 on the S&P lows, that no one was going to believe it. This was a discussion by Tim Ward, who I followed, especially in my early trading days, and traded with later on. The volume never gets real exciting. In fact, the volume in the S&Ps off that 786 low didn't even come in until 1050, and then it started to take off. Well, highs can be, and most of highs that are fairly decent ones in length, I'm talking about 6 months or longer, have the same kind of thing. They come in and they leave like a lamb, and they slowly turn into lions as they head lower. Same way as long-term lows start off like lambs, and by the time you turn around, they turn into lions. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, there was kind of a question, and I'm going to answer it a slightly different way, but why would I take massive action today or start taking massive action Friday and today? And the reason is just the huge lack of volume. On February 9th, we saw some 12 billion shares trade hands in the markets, and that's all markets. And, you know, we're tooling around 6.9 billion shares right now. So almost half of that as we're breaking these new highs compared to that low that came in and back with 12 billion, am I saying 12 billion? Billion, yeah, 12 billion. Even if you look at it in the ways of just pure dollars traded, 635 billion shares that February 9th day, which was the high. Even, you know, even on the 6th, you had 690, almost $700 billion trade. Now, Friday, we came into it about $346 billion. So we're going back up to previous highs. We've got some fairly decent lows. You can see the trend on the dollar really kind of continue lower. But if you've got a 40-point move in the S&P cash, and the most you can do is kind of a lame day for volume on the way up, that generally tells me one thing. That generally tells me the people that covered on the way up were not new buyers. They were mostly short selling covers. And they were running the market. Generally, that's what happens in these. So this chart is in each newsletter each day, my daily newsletter, The Path of Least Resistance, which you can go to the front page of TFNN and check out. But I decided a while ago to start working on ways to put everything that I look at in the newsletter. So you have the exact same things that I have. Anyway, so when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.